We are live. Welcome to today's episode of MicroConf on Air. I'm your host, Rob Wallen. Every other Wednesday at 1 p.m. Eastern, 10 a.m. Pacific, we live stream for 30 minutes and we cover topics related to building and growing ambitious SaaS startups that bring us freedom and purpose and allow us to value and maintain healthy relationships. Thank you so much for joining me today. I'm excited to talk about this topic of moving from a bootstrapped founder to getting venture funding. Today's guest, producer Xander, and I have been talking to and courting to get on the show for a few months, and she has just a wide breadth of experience, having bootstrapped her first SaaS company. It's called Support B. You can view that at supportb.com. She bootstrapped it to 45,000 in MRR. Support B is a ticketing system for collaborative customer support. And she built it with a co-founder on and off over the course of 9 years, and then exited her stake in 2020. Then she started her next startup, MagicBell, magicbell.com, and has raised almost $2 million in a seed round. MagicBell is the embeddable notification inbox for SaaS apps. And she is part of Y Combinator, winter class of 21, and was number 2 on Product Hunt, as well as sending more than 1 million notifications every month. So with that, let me welcome Hana Mohan to MicroConf on Air. Hana, thanks so much for joining me.
Hey Rob, hi. It's great to have you. It's great to be here. As you can tell, I'm a bit nervous to be talking to a legend like yourself.
Oh my goodness. It's your flattery will get you nowhere, Hana. No, it's really good to have you on here because very few founders have bootstrapped experience to, mid 5 figures who then go on to raise a round later to the extent that you have. And I've bootstrapped several things and then exited and worked within a venture funded company. So I know both sides of it. I still haven't, done all the things you've done. So I think there's a lot to dig into today, and I'm excited about it. Yeah, as a reminder, if you're in MicroConf Connect in the MicroConf On Air channel, please feel free to start asking questions. I have a few queued up, but given Hana's experience, I think that there's a lot we can dig into today. So I think to kick us off, I'm curious, you've been on both sides of this, and I view funding as a continuum. I think a lot of people know it used to just be bootstrapped and venture funded, but now there's angel networks, there's tiny seed, so it really is like this continuum of raising. But in your experience with Support B and then MagicBell, like what have been some of the biggest differences between bootstrapping and starting to build a company that has so much funding?
Sure. So obviously, as you know, it's more similar than not, right? So it's all the same sort of struggle and it's all the same sort of uncertainty that you have to go through. So obviously funding doesn't change that, but I do think that it kind of enables you to think a little bit more long-term early on itself. So you're not just trying to survive, you're not trying to just get the next customer or waiting to hit a certain milestone to hire the person that you think you need. So in that sense, it's just a little bit more enabling. And in terms of just how it feels, at least for me, I would say thinking about the sort of the vision piece and just selling that big vision to customers, but also other stakeholders like investors, employees. That's just a lot more, I think, in a funded startup than it's in bootstrapped startups. We can go into more details, but I would say that was the first thing that I was surprised about was just how often you find yourself talking about 5 years from now. Whereas before I was just worrying about how to get to break even and how to get to, just a certain milestone.
Right. Yeah, I find that when bootstrapping, you're looking a month or 3 months ahead. And it sounds like your experience with raising funding is you have to be convincing customers and investors that, hey, there's a vision here to get to a much larger company over the course of years. Did you have any other? You went through Y Combinator, which obviously is one of the gold standards in accelerators, and then you raised your round at Demo Day. Did you have other opportunities for funding, or was Y Combinator kind of your first pick and you got in and that was it?
I think I applied to maybe one or two other accelerators, and then I didn't really get in. And then I got into Y Combinator. And in terms of funding, I was having some conversations before, but I think, I mean, as you probably know, that there needs to be a forcing function to close money, and typically like the demo day is a really good forcing function. And so I think like while I was having conversations, it was really the demo day that brought it all together. But certainly it wasn't just that one day of talking to investors that led to it, but more kind of building the relationships over a few months, sort of just culminating into the actual funding around the demo day.
Yeah, that makes sense. You've written a lot. You've been pretty transparent with your story, and we should link some of these up. But you have a Medium post called "Advice for Entrepreneurs Experiencing Small Business Puberty: 5 Valuable Lessons Learned from Building a B2B SaaS Company," and you've done an AMA on indie hackers. I'm a transgender entrepreneur. I bootstrapped to over 40K MRR. Ask me anything, as well as an article also on your Medium channel at "Starting a New Tech Business as a Transgender Woman." And I love the transparency, the being transparent with your journey and helping share your lessons learned, I think is both inspiring, but is also, can help those folks who are just looking for that way to put that next foot in front of the other. I'm curious from your perspective, obviously your experience as a transgender woman had to have impacted, or it feels like it certainly has impacted your journey. And you've talked about it in some of these articles, but how do you feel like maybe bootstrapping was different for you as a transgender woman, or perhaps your experience raising funding, if at all?
Yeah, that's a great question. So I would actually say that in some ways, transitioning was easier as a bootstrap entrepreneur because you control the pace of your startup very much, like without any external influence. So I could take a lot of time off between 2016 and early 20 to just focus on my transition. So I would say if you want to transition, then probably bootstrapping a startup is actually better, at least for that while. I don't really know of anyone who's kind of done it while being a CEO of a funded startup. I can't imagine like doing it. And in terms of how the experience was, so I kind of like realized I'm trans and started transitioning much later in my journey in support B. But I do think some of the anxiety of sort of being trans that I couldn't really understand and attribute to being transgender was misattributed to sort of not being like a believer in what I did. Or so I think like I found it a little bit challenging to sort of invest myself entirely into my startup because I was feeling all this anxiety, and I kept thinking that maybe it's because my startup isn't growing or I don't love working on this idea, and I would have these like moments of going in and out. So it was a bit of a negative influence in that way. But then I'm very grateful to the business for giving me the space to transition. So I would say like it did more for me than I did for it in some kind of like
Right.
ironical way. Yeah.
Yeah, that's really interesting. But we talk so much about this term lifestyle business and having the freedom to do things and to do what you want, and whether that's to work. For me, it was at one point it was to work 12 hours a week and spend time with my newborn, or for you, it was the freedom and the ability to transition, which, as you said, would be very hard under most other circumstances where you are not in control of the business. Even if you are, if you've raised a lot of funding, you have this this mandate, to grow. And I can imagine that being pretty challenging. We have a listener audience question that I really like, and I think you and I can probably both answer this.
Sure.
It's a fun one. What is more fun, bootstrapping or being on the VC path?
So I want to mention that I've only been on the VC path for like 2 or 3 months, right? And this is just the post-seed. Terms are infinitely more favorable for entrepreneurs right now during the seed stage. There's no board seat given out. There's no control. So this is like the honeymoon phase. So now with that in mind, I would say they both have their kind of like moments, right? I mean, like we were talking, if you know what you want to do with your freedom and with sort of your flexibility of time, and then one day you want to work, one day maybe you want to control your pace, I think bootstrapping can be a lot of fun. But if you sort of do want to like think a little bit bigger and you want to sort of like build up a big vision and then either see it fail or succeed, and you want to sort of play it like that, I think there's a certain sort of fun in that for me. I don't know
Yeah.
what it is for you.
Well, what I found was having a big pile of funding behind us after Drip was acquired. I worked there for almost 2 years, and so while I didn't personally raise the funding, we had 38 million in venture funding, and I found for me it was easier to be more ambitious, like to try to triple or quadruple instead of just double. Like that was a thing that you just have more money, so you can hire faster and you can market more and you can spend more on ads. That was fun. The other thing I liked is I was able to hire a, I was able to fire myself from all the jobs I didn't like. Right when I was a bootstrap founder with a team of 10, I still did a ton of things that I couldn't delegate to anyone, right? I didn't want to slow my co-founder who was building product. I didn't want to slow him down with a bunch of operation stuff, but we really didn't have the budget, or I didn't want to go hire an ops person because we could have another developer, or we could have another customer success person. So there were certain advantages there. So I think if you really do want to grow, or at least in my experience, it was less stressful having the funding, and it was I'll say easier. But on the flip side, to your point, if you want the freedom and kind of the lifestyle, which I had for the, whatever, 10 years prior to selling Drip in 2016, then that's got to win out, and certainly raising venture. I mean, there are ways to raise small amounts of money and not have a bunch of pressure on you, right? Raise from tiny seed, raise from angel investors. But yeah, if you are going to go the venture track, I think there's certainly going to be a pressure, an external pressure that you feel, even if your investors aren't breathing down your neck. I mean, you're 2 or 3
Oh,
months in, you
absolutely,
probably,
yeah.
you probably don't have investors saying, grow faster, but you just feel like you should, right? Because you've kind of made an implicit promise.
Also, I think if you're part of a class like Y Combinator, you see people around you kind of like just crushing their goals, and it's it's overwhelming, but then it's also inspiring. So the reality isn't lost on you that a lot of people know how to grow really fast. Yeah, so
Yeah.
it's always there. Yeah.
Yeah. We have another question, a good question from Kartik from YouTube. And he says, bootstrapping is usually considered a long-term game, but that isn't the perception of a VC, a venture-backed startup. And I think he's implying that, there are bootstrappers out there who say, I want to run this for 20 or 30 years and take profits out, versus venture usually has a clock attached to it of, hey, we need an IPO or an exit in 5 to 10 years. Do you have any thoughts on this notion?
I think that just depends on the personality of the founder, right? So if you look at some of the companies like Twilio or Zendesk, I mean, one of our competitors for support be Zendesk, and I met their CEO, and they think really long term and very committed. Like Airbnb, I doubt they'll ever exit out of the business. Even an IPO is just a fundraising event, honestly.
Yep.
So I think that's just up to you as a founder. You can always choose to say no to certain exits. Uh, so I think like in that way, bootstrapped, like I said, bootstrapped and funded startups are quite similar. That you will maybe making these decisions in both of them. As a bootstrapper as well, there's a pretty good market to exit now, and you'll keep getting offers once you're at a certain scale.
Yep. And that's right. And I would almost argue, with the notion that bootstrapping is considered a long-term game, because most of the bootstrappers I know exit. They do exit because they eventually get tired. I mean, we can point a couple, yes, there's Basecamp and there's MailChimp and Buffer. I mean, there are a handful that have been around for 10 or 15, 10 plus years. But I never thought, to be honest, when we were building Drip, I didn't think I was going to exit. But someone offers you enough money that you never have to work again, and you can fund your kids' college. Like suddenly it was like, oh, really? So I can de-risk this entire thing. Like it rocks your world. I didn't think Josh from Baremetrics would ever sell. He sold. I mean, we could go through the whole list of people. So as as you're saying, there's a real, when you're, if you're netting $300,000 a year on your business, and someone comes and offers you $3 million, $4.5 million, $5 million for this business, you do the math quick. It's like, that's interesting. Another question from a question from Pablo.
May I just add one more thing?
Yes,
sorry.
Please do.
So, and the other thing is, like, if you're a funded startup and you're doing well, you can actually take a partial exit and then not exit. So you can take like a secondary sort of like sale of stock, and then you can take some money off the table. So I would argue that you can actually go more long term in a funded startup in that way, because the market for secondary stocks sale exists, which doesn't exist for bootstrap startups.
Not really. There's one or two investors I know that do it, and it's very nascent space. And you're right. The
Mm-hmm.
secondary of, what is it, secondmarket.com. I mean, there's like 4 or 5 players where
Sure.
you're just selling. Yeah. I think that's a really good point. Pablo in MicroConf Connect asks, in what way can the world of startups improve to be more friendly, accepting, and inclusive to trans people?
Okay. I mean, I appreciate the question, first of all, obviously. And I think startups are kind of farther ahead than most other, I would say, like older organizations and governments in terms of trans acceptance. So that's already a pretty good start. I think, like, obviously, healthcare is a big one. If you provide insurance, like offering insurance to enable people to transition is a big one. Like when I was on active on the forums on Reddit, some people would actually like quit their good job and go work as a barista at Starbucks, because Starbucks had a very inclusive insurance program and they covered your transitioning. So just like I think about like how much support exists for pregnancy, right? And it's definitely like a choice that people make to have children, but they get all the support from the world. And now just think about like how can you replicate that for something like transitioning, which feels like a choice, but is actually very much medically necessitated. So having like leaves for transgender people, having insurance, just having a welcoming culture of bringing them back. And I think like there's a lot of parallels there, and that's probably like a good place to start, I would say.
Yeah, that's great. Thanks for the
I mean,
question,
apart from
Pablo.
obviously like the pronouns and the other stuff, I would say like if you want to go deeper, I would say healthcare is the big one.
Yeah. Well, and I like what you're saying there, because on my radar would of course be pronouns and acceptance and just the surface level stuff. But when you bring it up like that with medical care and leave to be able to do it, not something I would have thought of. So glad I'm not going to be able to. A lot of these I weigh in on. That this one I don't have any insights.
Sure.
Um, Dan Dan from MicroConf Connect, he says, when do you quit your full-time job when you're burning the midnight oil building a bootstrap business?
Huh. That's a tough one to answer. I mean, it just I doubt that, like some people actually build it up enough that they can then quit because they have like whatever enough money going. You could raise a little bit of friends and family around and then quit. I do think you want to kind of try to avoid burn yourself out. So if you think that that's where you're headed, you're better off taking at least some money from your friends and family and using that to quit your job. I think it also puts more pressure on you to actually make it work. Sometimes, like a side project can stay a side project for too long otherwise. So I say that, yeah, just don't burn yourself out. The job market is so great that, especially if you're a programmer or a marketer or a salesperson, you can always get rehired or you can always do some consulting. So you can restructure your life a bit from like a full time job to maybe some consulting and then take more time out.
Yeah, that's a model I often see is consulting during the day or consulting part time, um, saving up enough money for 6 months off, perhaps having a
I think that's a
supportive
better
partner or
one.
spouse. Yeah, it's
Yeah,
not
than
uncommon. I
just
know. Yeah, trying to slice it. I agree. It puts more pressure on you because, let's say you save up $30,000, $40,000 and then you just watching that melt, that ice cube melt. I think but to your point, then your back is to the wall, and whether you're stressed or not, you're at least really going to try to execute and make it work.
mhm.
Yeah, back when I moved, when I quit my day job, so to speak, I was a consultant still at the time, and so I was working like 8 hours a day and then working nights and weekends. It was tiring. And to your point,
Yeah.
I didn't burn out, but I certainly came close. I didn't know any other way. I was pretty risk averse, so I was kind of scared. And even though I had enough money in the bank to quit, I didn't want it to go sideways. I also didn't really have a role model of seeing someone do this, right? This is 2008, 2009, and I hadn't
Sure.
seen anyone bootstrap a business during the day, and do it. So I think there's a level of comfort and risk tolerance here. If you're pretty risk tolerant, I think you can quit a lot earlier than someone like I did. What was your story, Hana, in terms of, did you have money in the bank, or did you work a day job and do nights and weekends?
So I didn't. I was just like foolish enough to quit it and think that it would all work out. And then I did have to do actually some consulting. So this was like I started up in 2007, and so I was doing a B2C startup before Support B, and I did the same thing. But I would consult like maybe 3 or 4 months a year, and then they keep
Mm-hmm.
the rest of the time just to work on my startup, and that sort of like got us to just kind of like a ramen profitability for the B2C startup called Musibu. And and then we started Support B, and then we again had to do some consulting, and then it was only a few years later that it kind of like broke even, and we could just live off it. Yeah.
Right. Question from Jessica Baldwin in the chat. She says, now that you have more resources and the ability to grow your team, what are some of the responsibilities you plan to delegate, or perhaps already are delegating? I mean, maybe I should preface that with saying, like, how large is your team right now?
Yeah, so I think like this is an interesting point to talk about. When people think about like raising money, they think that you raise money and then you immediately start spending it, and you have almost no control over it, right? Like people talk about, actually, most startups early on just raise money and then keep it, and they almost hire nobody, or they maybe hire 1 or 2 people. So our team is still pretty much just my co-founder and I, and we
Hmm.
have somebody working with us part time who'll probably come on board full time, and we're trying to hire one more person full time, but I think like until most startups, at least like off YC, that's their advice, don't hit product market fit, they don't actually go out and hire. So I still don't believe very much in this idea of, and a lot of startups that raise something like we have raised like 2 million probably already have a 10 to 12 people team in 3 to 4 months, and it works out for some of them, it doesn't work out for a lot of them. So early on it's very much like a bootstrap plus, I would say, in the sense that you don't have to think about like getting like somebody and paying them $100 an hour, or but it's not that you entirely like change the model. So in our case, like we want to hire maybe 1 or 2 programmers, and like in the front end, back end, we want to hire a product person early on because we think that's really useful. And that's about it. I mean, as a founder, you got to do the sales yourself. You got to talk to your customers directly. So in that way, it's very much like a bootstrap startup. I think it starts diverging only post product market fit. Uh, in
Yep.
my, I mean, in my limited experience, I think.
I think that's great insight. And I think a big piece of it that people don't realize is they look at it as this binary, bootstrapped or funded. But I've pointed to entrepreneurs like Jordan Gall with Cart Hook, and I used to say he's still a bootstrap founder, even though he's raised however many hundreds of thousands or millions of dollars. And the term we've been using lately is bootstrapped and mostly bootstrapped. And that mostly bootstrapped are
Yeah,
people who
that's a good
have
one.
raised funding, but they still run it like it's very capital efficient. To your point, you have 2 million in the bank, and it's just the two of you, because until you hit product
Yeah,
market fit, you don't want a bunch of folks burning up the
it's also
payroll.
just early on, like you're still trying to like kind of, it's like having a rocket or whatever, right? Like you're not really a rocket, you are a little like boat that's trying to find its direction, and it is actually much easier with a smaller team, so you really want to keep it small. But then once you're certain of the direction, that's when you want to like fire up the engines and you want to go full blast. But if you do it a little bit too soon, then you're just going to fire off in a wrong direction, and it'll be very hard to like turn around.
Right.
So
Right.
yeah.
And so then to Jessica's question, she was saying, you have the ability to grow your team, you have resources. What are some of the first responsibilities when you do start hiring? What are some of the first responsibilities you plan to delegate? You've mentioned a couple developers. I'm curious, I've
Yeah.
seen a model recently where founders who raise money, they'll hire like a chief of staff or a director of operations, someone who just handles kind of all the miscellaneous stuff. So, is that something you've thought about, or what else aside from development, are you thinking of delegating?
I think it's definitely something that I think about because it just becomes so commonplace now, right? Like to have a chief of staff. I still kind of ask myself that, am I hiring that person to sort of work on what I've already figured out, or am I expecting them to figure things out? And if you're expecting them to figure things out for you, then it's a very specific person you can hire, which is a founder that's just choosing not to do a startup at this point. And there are very few people like that. So if I found somebody like that, maybe I would hire them. But I think it's very hard to go out and look for that person and actively like seek them out, unless you already know them from a network.
Right. Another question from Dan in Connect. He says, I've read that a 50-50 split is a good way to divide your time and focus between marketing and product. How do you split your time between building product and marketing channels?
So I wish I had like a good answer for it in terms of like I was doing it very well. I think it fluctuates, obviously. We are steadily still in that stage where you're not really doing marketing as much. You're doing kind of like early customer development, right? Like so we have a product, it works, it kind of it sells. People come on the site, they buy it, but I don't think we can like go out and start marketing it in a big way, because I don't think we have like identified exactly who are, or like kind of like that predictable revenue book style of like identifying that niche. So until I think you do that, you're actually not marketing as much as just trying to find that niche. Once you do it, I think that's actually the time, if you have the money, to hire somebody to run the marketing for you. So up until then, you can get a team to write blog posts for you or something. I would say like probably in terms of pure marketing, I only spend 10-15% of my time, but I spend a lot more time, maybe 35% or something, just talking to customers and trying to find that market segment. I don't want to call it marketing as much as I want to just call it customer development. And I mean, the rest of your time goes into the product, of course. Yeah.
Very nice. Let's see. We're coming up to the close, but I feel like, well, I'm curious. I have two closing questions. One is, you built Support B, bootstrapped it to 45K MRR, and now you're looking to do that plus beyond with MagicBell. Something that so many people struggle with is getting the first 100, 200 customers. How did you do that with Support Bell? Or now I'm mixing up Support B and
Sure.
and how
That's common.
And are you doing a similar thing with MagicBell, or are you not there yet with MagicBell?
In Support B, I would say it was a lot. I think I wasn't like paying that much attention to how it would go from 200 to 2000. And I think that was a fatal mistake. So I was like, I thought just getting to 200 is enough, and then getting to 400 is enough. So while in MagicBell, of course, we are trying to get from whatever we have to 200 and then to 400. I think what we are trying to figure out also is going from 200 to 400 a lot easier than going from, let's say, 10 to 200. And where to find these people? Obviously, I think content remains, I mean, for most things, like content remains a great channel. If you are part of an accelerator like Y Combinator, you also find a lot of early customers just from that network. And that's why I think like even if you're not raising like big money, I think joining something like Tiny Seed or another like bootstrapped accelerator is a great idea, because early on you really want to find people who are already sort of primed to try new things. It's a certain kind of mindset almost. Beyond that, of course, like just the usual channels, SEO and product. I mean, I was surprised honestly by just how well Product Hunt and even TechCrunch works still, in terms of like actually finding you real customers, or even Hacker News. Again, you don't want to rely on them long term, but just to get your early customers so you can understand who to sell to, these channels work pretty well.
Nice one-time bumps. So as we close out, my final question is, it's around raising funding. And to me, I guess, why is MagicBell a fundable idea? And was Support B also a fundable company, and you just decided to keep it bootstrapped?
Support B was definitely very fundable. I mean, if you look at Front, if you look at Help Scout, they've all gone on to raise a lot of money. So we were in that first wave with Help Scout, the shared inbox startup. It was definitely very fundable. I think one, it was definitely harder to raise money back in 2012. It's definitely not anywhere like what it is today. But then second, I think I also didn't understand the model very well. Um, like I don't know if you ever early on thought like this, but if my ARR was already 250K, I was very reluctant in raising 250K because I always thought I'm already making 250K a year, right? But then that's just because that will come over a year, then the fees will go out or whatever. But this is 250K now to deploy. So I think I had some of those basic models wrong. And I think that showed in my pitch. I wasn't really thinking about what's in it for the investors, right? Like you can't go to them and expect them to just help build a good business. They do actually want their money back multiple times, probably actually 100 times. So I didn't really quite understand all of that. So between just the scene and my lack of understanding, I couldn't raise money. And I think also partly because, like I said, I was a bit reluctant going down because I just wasn't willing to kind of trade off my time entirely. What makes MagicBell a fundable idea? Well, so what we are doing is we are enabling each application to build a better notification experience. And well, just when you think about that, that's a big market and that's growing each day. Every day you have more SaaS apps, you have more mobile apps, you get more notifications. So it's a problem that's actually growing. So one is that. The second is, if you look at some of our competitors, the incumbents like Twilio or SendGrid that are doing a piece of that problem, they're already pretty big. And so there's a lot of precedent in terms of just how big these companies can become. So, and then, we have a bunch of customers already that are paying us. So there are some early numbers in terms of like what we can charge them, what the life, like we have zero churn so far in the last 8 months. And which is not a lot, but it's still enough to know that the SaaS flywheel will kick in. So when you put all of that together, that's a pretty convincing pitch, I think. Doesn't make it easy to raise, but it's like a start.
Yep. And it's kind of spoken for itself, raising almost $2 million bucks. Congrats on that. Hana, thanks so much for joining me today. If folks want to keep up with what you're working on, that's magicbell.com. And on Twitter, you are Una Mas Hana, little Espanol there for those folks in the know. Una Mas Hana. Thanks again for joining me.
Thank you so much. It was great. Bye.
All right. And thank you for joining me. Today's episode was brought to you by Rewardful. Rewardful is quickly becoming the go-to platform to set up affiliate, referral, and partner programs for your SaaS membership or subscription business. Rewardful handles all subscription billing scenarios such as free trials, upgrades, downgrades, cancellations, refunds, and pro-rated charges out of the box with their simple 15-minute setup. They're the only platform that has a built-in affiliate finder that crawls the web and surfaces high-quality, relevant affiliates for your program. Simply search by keyword, competitor, or alternative names and reach out to the best affiliates in your market to take your program to the next level. Check them out at getrewardful.com/startups to get 30% off your first 3 months. The offer expires in 5 days, May 31st. This is the last week for 30% off your 3 months. And thank you so much to Rewardful for helping startups for the rest of us and MicroConf On Air stay on the air. Thanks for joining me. See you in a couple weeks.